In this video, we're going to talk about 7 stocks under $15 to buy and hold forever. So before we start, please like this video and subscribe to our channel for future updates. In general, when investing in stocks, you want to concentrate your purchases on businesses with solid fundamentals rather than merely on businesses that fit a certain pricing criterion, such as stocks under $15. However, some publicly traded companies provide appealing tails that persistent purchasers may hang on to for a while. To be clear, these under $15 stocks tend to be either less well known or more speculative than usual. In other words, you may have to keep them for a while before you see significant capital growth. Of course, these more risky ideas could also backfire, so rigorous money management is essential. Here are 7 stocks under $15 that you should purchase now and keep for the rest of your life. Number 7. Vale. Vale, ticker VALE, is a Brazilian multinational corporation that's engaged in metals and mining in Brazil. Vale is the largest producer of iron ore and nickel in the world. Vale is the world's largest nickel producer. Sales of nickel represented 17% of total company revenues in 2014. In 2014, Vale sold 272,000 metric tons of nickel. The phrase stocks under $15 to purchase and keep forever is now used figuratively. But objectively, we can see a case for risk-taking investors to hang on to this investment for decades. Given the importance of nickel to the production of electric vehicles, EVs, a favorable impact on Vale is inevitable over the course of the long term. According to a recent report on CNBC, the metal nickel is essential to the functioning of lithium-ion batteries. Maintaining a plentiful supply of the material is going to be very necessary for the electric car industry. In essence, nickel's price increases might reduce EVs' competitiveness, especially compared to their combustion-based competitors. The geopolitical component of Vale is what makes it so interesting right now. The strong relationship and collaboration between the US and Brazil boosts the value of the Vale stock. Additionally, top stock analysts believe that the core business is modestly undervalued. Number 6. Enel. Enel, ticker ENLAY, is an Italian energy firm, albeit American investors may not immediately recognize its name. In the past, the company primarily focused on gas and electricity distribution. Enel has now expanded into other industries, including renewable energy options. The company currently offers a diverse selection of energy systems, including those that are powered by the sun, the wind, and geothermal energy. Diversification across a variety of renewable energy sources is very necessary, much more so than some individuals may realize. In essence, various sources have varying levels of capacity factors, or the ability to generate the most power in a given amount of time. The greatest capacity factor is found in nuclear power plants, which means that they are virtually always operating and producing energy. The sources with the lowest capacity factors are solar and wind on the opposite end of the spectrum. But geothermal, which generates 74.3% of the energy compared to nuclear's 92.5%, fills the gap. Therefore, Enel is prepared to play a significant part in the development of the renewable energy sector. However, Enel poses market concerns due to the potential for value traps in the shares. For patient investors, it's still one of the finest stocks under $15, but use caution. Number 5. Bayer. Bayer, ticker BAYRY, is one of the most well-known pharmaceutical companies in the world, and could no longer qualify as one of the stocks under $15. The stock just has to increase by around 17% from its present level to surpass the goal price. Even with some short-term encouraging rumblings, Bayer is still a company you should keep an eye on. The majority of market analysts consider Bayer to be a somewhat undervalued asset at the current moment. Bayer has a healthy momentum, solid balance sheet characteristics, and alluring profitability measures. Prospective investors should also be aware of the company's 6.55 times projected price-to-earnings PE ratio. That is much less than the 16.2 times industry median. The agricultural division of Bayer is another aspect to take into account for the long-term thesis. A section of the pharmaceutical company is dedicated to managing weeds, diseases, and insects. This aids struggling farmers throughout the globe in maximizing their essential crops. Number 4. Takeda, TAK. For those looking for stocks under $15, Takeda, ticker TAK, which continues the pharmaceutical theme, provides an interesting option for investors. Nowadays, the practice of modern medicine is a wild industry that often results in feast or famine dynamics. Either you're breaking out in this industry, or you're worrying where you'll get your next meal. But up to this moment, Takeda has been the epitome of what it means to run a corporation under the radar. Takeda stock is currently only down a little since the beginning of the year. Stock analysts believe that Takeda is fundamentally properly priced. The company is strong in many areas, but its financial balance sheet may need some work. The company has strong areas of strength across the board. Long-term investors should be aware that tax-forward PE is 10.4 times. Again, it is substantially less than the median of 16.2 times for the pharmaceutical manufacturing sector. The enormous pipeline that Takeda has in the future should pique the interest of patient investors. The business focuses on cancer, rare illnesses, neurology, and gastroenterology as its 4 therapeutic specialties. It also benefits the fields of vaccinations and plasma-derived medicines. Number 3. Sirius XM, SIRI. Sirius XM, ticker, SIRI, is one of the riskier names among stocks under $15, and has recently produced a lot of negative cash flow. The company provides satellite radio and online radio services throughout the United States. It also has a 70% equity interest in Sirius XM Canada, an affiliate company that provides Sirius and XM services in Canada. Since the beginning of this year, the price of the company's shares has dropped by around 3%. This might be attributed to the fact that there hasn't been much excitement over the firm. During the last 5 years, Siri has only achieved a return that is little more than 7% overall. The influence of the new normal imposes significant disadvantages, which is much more challenging. If people continue to work from home, there will be less incentives to acquire satellite radio subscriptions to make the trip more entertaining. A slowdown in the economy has the potential to completely transform the organization. It's a cynical defense, but one that may help Siri shares rise in the years to come. Number 2. Worldwide Technical Institute, UTI. Universal Technical Institute Incorporated, ticker, UTI, is a private for-profit system of technical colleges throughout the United States. The school offers specialized technical education programs. Under the school's banner are several brands, including Universal Technical Institute, UTI, Motorcycle Mechanics Institute and Marine Mechanics Institute, MMI, MEAT College of Technology, MIAT, and NASCAR Technical Institute, NTI. The recent debt forgiveness initiative launched by President Joe Biden's administration has as one of its underlying themes the continued high cost of tuition. Furthermore, it looks that at the very least a sector-specific recession is on the horizon as a result of technology companies laying off employees. In other words, pursuing a career in white-collar work may not be the best path to success. When it comes to equities under $15, Universal Technical Institute, ticker, UTI, makes a compelling argument. As its name implies, UTI is a vocational training facility that specializes in producing auto and marine mechanics. EVs may ultimately be the preferred form of transportation in the future. On the other hand, it may take a number of years to complete that narrative. Blue-collar careers provide a strong alternative to the conventional white-collar path in the interim. UTI is a smart investment for investors looking to spend less than $15 on a stock. Stock experts believe that UTI's current price represents a bit of a discount. Additionally, UTI has an impressively forward-thinking technical momentum. Number 1. Ericsson, ERIC. The maker of 5G technology, Ericsson ticker, ERIC, would seem to be one of the most important stocks to invest in. ERIC offers an intriguingly positive view, noting that more institutions are incorporating 5G technology. However, the core company has always been hampered by worries about competition. Additionally, Ericsson stock hasn't fared well through the ups and downs of the new normal. Shares have decreased by roughly 33% so far this year. The consumer sentiment swing makes Ericsson riskier than many other equities under $15. Consumers may not be as interested in cutting-edge technology as they once were due to inflation hitting multi-decade highs. Instead, they are more interested in getting the best deal possible, which conflicts with Ericsson's objectives. However, in the long term, Ericsson may be a tempting idea. It would need to be for patient investors who are prepared to endure possible volatility. Nevertheless, there's a lot to like here, especially given the profile of the firm, which is mildly undervalued. Which of these stocks under $15 would you consider adding to your investment portfolio? Let us know in the comments below. Thank you for watching and don't forget to subscribe to our channel for more weekly investing videos.